Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. What a rally yesterday. Now, listen, we've been talking about how the market was into major support and due to bounce. Did I think it was going to bounce that much? No, not necessarily. But we were positioned, if you're a member of Smart Money Stocks and ETFs or any of the other services, we were positioned for this rally. Yesterday, I closed out 11 winners, average of about 12% per trade. Incredible gains for members. All right. Markets today pulling back just a little bit. We're going to get into the nitty gritty and see where things go. First and foremost, let's flip over to the charts and take a look. This is the S&P futures, and we can see that, again, we faded kind of in the overnight into the open here. So with less than 30 minutes to go, the S&P futures are trading just slightly negative, down about 2%. I know 2% normally is a big move. After you rally 10%, that's just a minor retrace. Now, this is really what it gets into. Take a look at this, guys. This is the level that I highlighted to you guys on basically Friday of last week, coming into Monday, saying, guys, this is or should be a major technical level. And remember, the kicker is this, is that when we're looking at charts, it's probabilities, right? We're looking at human emotion. That's what creates a chart, right? Greed and fear, up and down, up and down. And so by looking at patterns of human behavior, we're able to essentially gauge or find the probabilities of a move. And what I found in literally 26 years of trading is that when you have two trend lines that are merging together and price comes into them, it works like a double factor support level. So one line is great, but when you have two, it's doubly great. And that ultimately means your probability for a bounce goes up. And we can see again, I mean, look at this move yesterday. Incredible rally. I got to just show you this. Do you guys see the highs of yesterday and overnight right here on the futures? Do you guys notice something? Look at where it's getting rejected right here. Amazing. Amazing to see that. So again, huge fall, retrace, and former pivot point. Again, a pivot point is a down move with a subsequent up move. That creates a pivot point. It's pivoting. The market is pivoting. That now becomes resistance. Now let's talk about some data here, right? So we heard yesterday that Donald Trump basically took away the reciprocal tariffs on everyone but China. All right, they basically lambasted China, saying, hey, they've been the ones that retaliated. We said, don't retaliate. So they're going to keep their tariffs. But everyone else, you're at 10% and will negotiate from there. All right, so that was why the markets ripped higher. Now, a couple interesting points. If you take all the goods that the U.S. imports, including everything from China and everything from everywhere else, and you factor in the tariffs of about 125% on China and 10% on everyone else, the average tariff rate on things that we import is 23%. So 23% tariff is still very, very high. And again, it is something that we have to monitor. In other words, it's not all roses and gumdrops and, you name it, right? It's not like everything is back to normal. In addition, what have I said to you guys in these game plans? I've said that the damage done in the market psychologically to investors, to CEOs that are trying to make decisions on tariffs, all of these type of things are dramatically changing the future landscape in the near term on the markets, meaning that the economy is still likely headed into recession. All right. So listen, I was long. You can go see the track record for yourself. It's up there for everyone to see. But it was for a short-term move. And I've gone over that with you guys as well, is that in trading and investing, you have a very short-term day trade. You have a swing trade, which is a little longer term. And then you have your long-term investing. All right. Swing trades and day trades, longs. That was no brainer. On my longer-term outlook, this is just a bounce before further downside. Why? Well, because again, you still have tariffs. You have a trade war with China, and you have the unpredictability of a president and his administration on what is going to be in place. Think about this. Let's say you're a CEO and you were just investing $1 billion into a plant in the United States because you were making all your stuff in Vietnam and it was going to be like 70 whatever percent tariffs. Well, all of a sudden it's like, holy crap, I hope I didn't sign that deal for $1 billion factory here in the US because now it's 10% tariff. Like, okay, wait, You know what I'm saying? Like, it's very hard when you don't know what the future holds. And in 90 days, what if no deals are reached? Do tariffs go back to 70%, 60%, 50% on most of these countries? That, again, is that instability is going to make it very hard for CapEx, which is the spending that these companies do, to really go forward. They're going to be much more conservative on their CapEx until they have clarity. All right, so again, just little things like that we want to keep track of. The other thing we have to note is I gave you guys the golden ticket to Trump's reversal yesterday. Okay, so number one, did everyone see that he tweeted out? I mean, this was, I mean, if there was such a thing as insider trading or signals to people, I mean, he literally said, this is a great time to buy the market, and then he signed it DJT. Most people thought it was DJT, the stock, but he really was signing it Donald J. Trump. And then like 2 hours later, he announced no tariffs. I mean, holy cow. Incredible move and result. But remember yesterday when I went over the 10-year yield chart and I said, guys, the 10-year yield spiking is going to be the one, basically Achilles heel to the U.S. and their trade war. And the reason is because all these countries we rely on to buy our debt. Not only that, but the more trade war and the weaker the economy is expected to go, the less even people that do want to buy our debt are going to want to buy our debt at the current interest rates. And so we saw, generally, remember, this is really important. When the stock market falls, yields or interest rates generally fall. Because again, the idea is that as the stock market falls, demand for treasuries goes up, and that forces interest rates down. Instead, we saw yields going up instead. So we saw interest rates going up, which means demand for treasuries was dropping, right? And so that is the kicker here, to the point where you had a move on the 10-year yield from 3.86 to a high yesterday of 3.5. This is literally a crisis in the making. Okay. Now, a lot of people and even our president has said, oh, well, let's just have the Federal Reserve cut interest rates, right? Just, the Fed should cut interest rates, right? How many times have we heard that? It doesn't matter. I'm telling you right now, the Fed has very little impact. When the markets dislocate, the Fed has almost no impact. Remember, the Federal Reserve FOMC rate, that is the bank, what they lend to the banks. Now, generally in normal markets, the yields will follow that. But when they get dislocated and people just say, hey, listen, we're not buying U.S. debt. No way. Whether it's a result of the trade war and other countries saying, screw you, we're not going to buy this, or if it's a result of people just not knowing where the U.S. economy will be and they don't want to hold debt of the U.S., it doesn't matter. The Fed could cut rates a full basis, like 100 basis points, and it wouldn't matter. So just a couple things to understand about that, guys, when it comes to these interest rates. And so this push up, if this had continued, you would have seen a massive financial crisis in the U.S., and it could have spiraled out of control. Donald Trump had to act. And we talked about this. I literally talked about this in yesterday's game plan, yesterday morning, as being the big factor to watch. And again, dead on right here. And that's what we saw. All right, let's go to a couple other charts here. The NASDAQ getting a big bounce here. Remember this bigger chart. So we have our COVID low, bull market high, bear market low, bull market high. Yes, we were coming down. Very unlikely we go straight there. You're going to get a bounce. I even think there might be a little bit more upside. There's a gap fill up here on the NASDAQ composite around 17,600. I could see us going there. And then I think our next leg down takes us down here to target. So by no means, like I said, sure, I was long. I was positioned long. Members, amazing day yesterday. In fact, yesterday was one of my biggest personal profit days in the market historically as well. But it's not over. And I want to be clear on this. This is not a clear green light out there to go crazy and buy stocks, in my humble opinion. It is not at that point. Now, the other thing that's interesting is if you take the bear market low to the bull market high, look at where we bounced, 50% fib retrace. So again, there's a reason there. You also had this pivot low and this area right here on the chart. But look at that, 50% fib retrace right there. So that means, again, we've already bounced. Maybe we go a little bit higher in the coming days. I think we're down a little bit this morning. But again, you just don't know where we'll go over the next few days. But ultimately, the next leg down, if you get to the 618, look at where the 618 is, right in here. And it's also essentially, if you go out on this chart over here, let's say it hits over here, these two lines, the upsloping parallel, will meet this 618. And that, my friends, would be a major, major level for another huge epic bounce. So notice how we've been able to navigate this and literally look at the ES futures, the S&P futures, major level, right? And there's your bounce. And if we look at the QQQ or the NASDAQ, you got your bounce at the 50% retrace, pivot points right in here. And then if we do go and we come down again, your 618 is matching your upsloping trend line. So essentially we can play out the highly likely scenarios, not 100%. Remember, no one's 100%. I certainly am not. But again, if I can get the odds in my favor to 80%, that means 8 out of every 10 I can have a win on. The math should take care of itself. NVIDIA, big bounce, guys. Big bounce. It's not done going down. I want to be clear on that. Great bounce, fantastic bounce. But again, if we look at yesterday's close, look at this low right here, right through here. And also look at this here. If we take this and we take like this pivot low right through here, you can see you kind of pierced that a little bit there. And then again, you have other levels here, but we want to just watch as we rally up here to see. I mean, do we go to this level right here? This would be a retrace into a level as well. What levels ultimately do we get to? But either way, that was a huge, I mean, to see NVIDIA bounce 19% yesterday, Broadcom bounced about 20%. Tesla was up, 22%. Here's Tesla. Now, by the way, Tesla is a great bounce, and I gave you guys this level for the last month. That was a huge, huge level. I want to be clear. Tesla can bounce more, but eventually it's going to go lower based on technical analysis. It still should go lower to the downside. All right, so just be aware of that. One level I'll be watching closely is this. This will be my next target on the downside. Let me get rid of this measured move over here. Major low from 2023, major low from 2024, and the next breakdown. And listen, I could see us rallying on Tesla back here to about 325 to 326, but at some point, when we come down, this is your next target zone right down here based on technical analysis. All right. So again, just be aware of that. Notice also, and I want to show you guys this, see this flat bottom right here? Drag that out. Those two lines meet. That's going to be additional support right there. There even could be additional factors there that I'm not even seeing, just doing this in real time. Apple, again, huge bounce on Apple, guys. It filled the gap here. I had a short on Apple that I was out of the money on. I stopped out of that for a little bit of a loss, and I flipped it into a long, and then we banked a monstrous move yesterday on Apple. And it just shows you, like, I do take losses, but I manage my positions. And again, obviously able to manage and see the charts. The charts guided me to saying, you know what, it might be good to take a loss on Apple, but also flip it around to a long because we're likely going to bounce. And that's what we did right here. And I even talked about that with you guys about being long Apple, being long some of these other plays on this major move. Let's flip over to Bitcoin. Bitcoin today, small pullback right here. Look at where it went, right to the line that I've given you guys. So there's your down slope right there yesterday, and it's getting a small pullback. The positive is that in general, we've now hit this down sloping trend line a lot, right? All in here. You can go back here, here, and here, but really recently, all of these are hits. This means this yellow line has weakened. It does open the door for a breakout, although the breakout probably gets stopped pretty sharply at around 91 to 92,000. But again, it does potentially bode well for at least a little bit more upside in Bitcoin. All right. In addition, we talked about Ethereum yesterday. If we looked at that, it was right into this downsloping trend line, pivot low, pivot low, pivot low, and look at the bounce. Now it has to fight through this. It's a very tight wedge forming. Which way is it going to break? Up or down? Generally, downsloping wedges break up about 8 out of 10 times. That still leaves 2 out of 10 where it could break down. So just be aware, there's no easy 100%er, as I always say, in trading. It's all about probabilities. All right, couple other things here to go over. Let's take a look at gold. Gold continues its safe haven demand asset, and we can see that pop up here. So again, nice move on that front. And again, pushing up right in this range. We'll have a little resistance at double top. Glad I got out of my shorts right here. I didn't get too greedy on that, understanding that the mid to long term is still very bullish on gold. Silver, I am still long on silver. Let's see how it's doing today. It's basically flat, trying to push above here. If it can get through here, we should go up here. That would be where I would get out of my long trade on silver. Copper, I went long on copper the other day, as I mentioned to you guys. Today it's pulling back, but still up on the trade after that huge move yesterday. Going to oil. Oil had a huge reversal yesterday, but it's coming right back in. The problem with oil is that it's broken this really long-term trend line. And again, while you could trade back up into the scene of the crime here, this is now going to be huge resistance. Okay, anytime you have a support level that goes back literally years, I mean, we're going back to 2021, and really you can even go back to 2018, where this line right here to 2019, 2020, 2021, and then we broke above, retraced, and hit it until breaking. Anytime you retrace, this now becomes epic resistance. If it was this good support back here, it's now going to be good resistance on the upside. So maybe we get back to 65, 66. But as I've said to you guys for a long, long time, I still have it priced in that oil is going to go a lot lower. And that's probably due to a U.S. recession later this year. All right. So again, just to understand my personal game plan. My game plan is when things are beaten down, the fear and greed indicator was at 3 yesterday, which is almost unheard of. We saw the the S&P futures hitting that major trend line, the NASDAQ doing that Fibonacci retrace. All of these factors led me to go long, but short term, right? Not going long for like months. Literally, you get a bounce like yesterday. I took about 80% of my longs off the table. I still have a few, because I always like to keep a little bit in the fire just in case the markets keep rallying. But yesterday was the easy money. That was the easy money, the short squeeze, the massive rally, the reaction. Now it gets harder to get more upside. And at some point, I still think we reverse. So if we do get more upside, my game plan is to actually short the rips, short into the pops, because again, we should roll over. And let's be fair again, going back to tariffs, we know that the tariffs on average are 23%. That's because China's at 125% and everyone else is at 10. But if you average how many goods are coming in from different countries, it's an average of 23% tariff. That's still high. Auto tariffs are still on. It's a 90-day reprieve, assuming negotiations go well. We'll see how they go. It's not like everything's been solved. In addition, the psychological damage that's been done to this market over the last week, 2 weeks, 3 weeks, whatever you want to say, that is significant, and it's not going to go away. Investors are going to be much more careful after watching their money evaporate by 20% in basically a month, if not less. I mean, really in a couple of days. It was like the NASDAQ was down, 22% from peak to trough going to Sunday night's futures. So these are things that you have to be aware of. And so ultimately, if we get a big enough bounce, I'm going right back to shorting the market on a shorter term basis, and I will keep you guys obviously posted on that. Lastly, I just wanted to show the natural gas chart here, as I always like to go through nat gas. And if we flip to the nat gas chart, you did get a bounce perfectly. Remember this line right here, guys? This is a line I said to you guys when we were even up here and we put in a topping tail. I said, yeah, you'll stop here and then you'll break here, bounce, and then eventually you'll hit here and then you get the bounce. That's great. I didn't go long here. I did get out of my short on nat gas, as I mentioned a couple days ago, but ultimately, it's the bounce is expected. Eventually, I think we're going to break here and actually break down. But again, where would I short? That's a good question. I think it would have to go back north of 4 before I would have the guts to pull the trigger, because again, natural gas is a tough commodity to trade because it can move 5% a day. Now, if you're in crypto, that's nothing. If you're in stocks recently, that's nothing. In commodities, that's a big move. I mean, 5% plus in a commodity on average daily is huge on those charts. All right. So again, folks, what am I looking for today? A couple for trading. For those of you that are day trading, we have Apple trading down, trading right around 190, pulling back after closing around 198. This level on Apple is going to be key around 184 or so. This pivot low, this is also a Fibonacci retrace right in here. So that's going to be a level where I might decide to day trade on the long side. And basically, that's my game plan for day trading today. We've talked a lot about swing trading and how my thought process is, how I unloaded a lot of the longs. And now I'm going to start waiting patiently to see if we go a little higher to start shorting. But in day trading land, basically my play today is looking for multi-factor retraces, significant retraces to buy and go long on. All right. And again, quick trades. These are day trades. So, I'll be in and out before the end of the day. All right, guys. Wow. What a day. What a week. What a month, frankly. What a start to the new quarter. But again, it's been volatility. While it scares the heck out of most people, it is our bread and butter here. This is what we live for because we can read the charts. find the high probabilities, and make a lot of money out there. You guys have a good one. Thanks so much for tuning in. I really appreciate your support. You guys have a good one. Take care.